Welcome to the PartsWatch invoicing tutorial. This is the first of a multi-part series designed to familiarize you with the point of sale experience. In this lesson, before we even open the invoice screen, we'll take a look at the differences between main account customers and retail cash customers. And in short, accounts are standalone customers who have their own pricing, taxability, and payment term setups, whereas retail cash customers can be identified or not and are dependent on another account to get their pricing and taxability. But you'll notice I called them both customers because you're able to sell to both at point of sale. So let's start with customers that are set up as accounts. They're added and maintained from the main account entry screen and have their own pricing, taxability, payment terms, statements, etc. There are a lot of fields here for flexibility of setup, but we'll only touch on a couple of the main ones. Look at the F1 help if you have questions on any of the other ones. Main accounts can be set up as 6 different types of accounts, each used for a different purpose and tracked separately for reporting. Most customers are set up as commercial and can be tracked for accounts receivable or cash or COD, which are cash on delivery customers, where payment can be made at the time of delivery. Retail main accounts are used to assign pricing and taxability to walk-in customers, whether they are identified or not. This way, a change in pricing can be made to the retail main account and affects all cash customers assigned to that account. Partnerships are used to set special pricing for retail walk-in customers that have to identify themselves in order to get the partnership pricing. Transfers are store-to-store accounts used to sell to another store within the enterprise. Invoices result in stock being moved from one store to another, and sales are tracked separately from regular sales. If sales between stores should be tracked with regular sales, then the account type of commercial can be set up as a transfer account instead. Employee account types are used to track sales to store employees, and store use accounts are used to track and report items sold to the store separately from other accounts. And account controls further determine how accounts are handled at point of sale. AR are your regular customers that have their own pricing and terms, etc. Master and linked accounts are used together so that linked accounts are treated as regular customers. However, the master account receives a statement combining all AR from the linked accounts as well as their own, and any payments are posted to the master. And no AR is used to sell to accounts such as transfer or shop accounts without getting statements or having to pay off the AR balances while still tracking the sales for reporting. As these accounts are added, pay type, taxability, and statements are set up. And while these setups are on the customer level, more controls can be set up on the AR control setup screen on the store level. But we're not going to get into those here. And we're not even going to get into pricing plans or sales tax and fee setup either. So check out those tutorials if needed. And now that we know what main accounts are, let's check out retail customers. These are cash customers that do not have their own pricing and taxability. Instead, at the time they're added to the file, they're assigned to a main account with the account type of retail main and get their pricing and taxability from that account. There are 2 ways to sell to cash customers. First, there's a default cash customer that can be used for all walk-in customers that do not need to be or do not want to be identified. So one account will be used as the default cash customer, and all cash sales to unidentified cash customers will be tracked to that account. Then, for any retail customers that do want to be identified, their name, address, and phone number can be saved and their sales and returns are tracked for them. Since you might want different pricing for these identified customers, a second account with the account type of retail main can be set up, and each of these retail customers will use that account's pricing, taxability, etc. Retail customers can be added and maintained from the menu, Customer, Retail Internet Customer, or hit the F3 hotkey to open the screen. And easier still, they can be entered at the time an invoice is started, but we'll see how to do that in the next video. Retail customers are automatically assigned account numbers. These start with an R and can be used to find customers at point of sale also. So summing up, accounts are used to track sales to individuals or companies with their own pricing and payment terms, to set pricing and taxability for cash customers, whether identified or not, for special customers such as employees or partnerships, or for selling to other stores or for buying store supplies. Retail customers are grouped under a retail main account, so pricing and taxability can be shared across any number of customers. Okay, now that we know the difference between main accounts and retail customers, join us for the next video where we'll show you how to find and get ready to sell to these customers at point of sale. And now, if you have any questions and don't find the answers in the F1 help file, please contact your support representative. And thank you for joining us.